Life insurance isn't about you. It's about protecting the people you love. When your income stops, the bills don't. Your family still needs food, a home, and a future. Life insurance steps in so your loved ones aren't left struggling. The best time to get it, when you're young and healthy, premiums are lowest. Don't wait for a crisis. You wouldn't buy fire insurance after your house burns down. It's not an investment, it's a safety net for your family's future. Ask yourself, are your loved ones protected if something happens to you? Get coverage and make sure your family's future is secure. You got life insurance, great, but where should the money go? Naming your spouse or kids as beneficiaries is common, but not always best. Enter the trust, a legal vault you create to manage assets for your loved ones. You set the rules, pick a trustee, and decide how and when your beneficiaries get the money. Want your child to get money for college, not a sports car at 18? A trust makes that possible. Trusts protect assets from creditors, divorce, and poor decisions. Don't leave your family's future to chance. Plan it. Here's the power move. Combine life insurance with a trust, specifically an irrevocable life insurance trust, or ILIT. The trust owns the policy and is the beneficiary. You fund the trust and it pays the premiums. When you pass, the death benefit goes straight into the trust, not your estate. Why? Because this keeps the payout out of your taxable estate, potentially saving your heirs millions in estate taxes. The trust manages the money by your rules, protecting it from taxes, creditors, and reckless spending. This isn't tax evasion, it's smart, legal planning. You're not just leaving money, you're leaving a structure that supports your family for generations. The ILIT is how the wealthy turn a payout into a legacy. It's about control, protection, and efficiency. Let's break down why this strategy is so powerful. Why do the wealthy love ILITs? First, massive tax savings. Life insurance payouts in a trust avoid estate taxes. That means more money for your family, not the IRS. Second, control. You decide how, when, and why your heirs get the money. Protect a spendthrift heir, fund education, or shield assets from divorce and creditors, all possible with a trust. Third, liquidity estates often have valuable but illiquid assets. An ILIT provides immediate cash to pay taxes and expenses so your family isn't forced to sell property fast. Fourth, privacy and speed. Trust assets skip probate, so your family gets the money quickly and privately. ILITs offer tax savings, control, protection, liquidity, and privacy. This isn't a trick, it's the foundation of smart estate planning. If you want your legacy to last, this is how you do it. Want more tips? Subscribe for more financial wisdom. Now let's make sure you avoid the common mistakes. Here's what you need to know. Setting up an ILIT is powerful, but you must do it right. Biggest mistake, transferring an existing policy. If you die within 3 years, the IRS can tax it anyway. Solution. Have the trust buy a new policy from the start. Choose your trustee wisely. Pick someone responsible or use a professional. Fund the trust properly by making annual gifts and use crummy powers so gifts qualify for tax exclusions. This isn't a DIY project. Work with an estate planning attorney. ILITs are for those whose estate, including life insurance, may exceed the federal estate tax threshold, or anyone wanting strict control over a large payout. If you want your legacy to be secure, protected, and wisely managed, an ILIT is your answer. Don't leave your family's future to chance. Take action, get expert help, and build a legacy that lasts. Your loved ones deserve nothing less. That's how you turn love into lasting security.